Hello, it is the 20th of March 2011. Welcome to today's Silver Log and some silver analysis. Before we get started with the charts, I want to go over a few different key points. One, Brian Shannon from alphatrends.net. I often get asked where I've learned this information from, different resources. This would be one gentleman whom has taught me a lot, has great information, and within the charts that he was talking about, what I like from his approach is one, he brings neutral views. Two, he was the one who kept on stating, adjust to what the message of the market states. And I think that's more than just in stocks. That's really a message in life. You have one decision for something that may happen. Let's assume that you want to sell the gold to Dow ratio when it goes down to 3 or 2, and then do whatever process after that. Well, my suggestion would be, okay, that's a good idea, but adjust to what the message of the market says until we get to that point, and then decide if you still want to do whatever play it is that you've been thinking about. Another one is failed moves create fast moves. This is the case in so many different charts. Price action, understanding that it's price that pays, not volume, all that type of stuff. It's only price. Understanding multiple time frames. We'll be doing that big today, and then making his idea your own, which is me stating the same thing. Whatever I've been stating in here, make my ideas your own. Ira Epstein is another one. Now he's talking a lot about the 18 period average, and I'll be going through that also as well. So if you understand what he's stating on that, then it might make it a little bit easier when we go through the multiple time frames lesson today. And stuff like Bollinger Bands, I'm not going to talk too much about it. It's a way of understanding where tops and bottoms may come through. But for the most part, I really wouldn't care too much about Bollinger Bands personally. Obviously, for everyone that's making whatever trade ideas, use what works for yourself. As far as chart patterns are concerned, you can use these technical analysis videos, or you could go through technical analysis for trading bullion, whether that's gold, silver, palladium, whether you're looking to be buying or selling. They can be great tools to help you along the way. Overall, I've been stating that this paper game is nothing more than a casino style game. It's gambling. If you use this information for that, well, then that's fine. But a lot of the gambling comes within emotion and greed, within education and reference. The best that you can have within this, by controlling your emotion, by acknowledging your greed, by having more education, the better that you should do. Now, moving on to some other questions. I was asked a couple weeks ago what the value of gold and silver happens to be. And the easy answer is the value or price of items, of how many are required for a transaction. So the value of gold and silver is how much you need to buy the vehicle that you're looking for, to buy the real estate that you're looking for, and so on and so on. He also asked what the value of paper money is, and I think that's very uh, easy to state now that it's not that much, and we've had a lot of inflation. How much inflation have we had throughout the years? Well, it's definitely been rampant. If you look back at what the inflation was 5 years ago, 2 years ago, 10, 20, 40, 50, 100, it is rampant. Is there any signs of it stopping or slowing right now? No. If anything, the signs are that it's escalating higher than it has before. Is there 100% proof that debt is guaranteed? And is it possible for positive manifestations to come through this? And I have seen, yes, it does seem as if there's 100% proof that the world we're living in, with the monetary system we currently have, that debt is 100% guaranteed through the creation of interest and all these fees, whereas the currency is monopolized by central bankers. And anything positive that can come through this? I'd have to say no. What happens if a new currency comes into existence? A lot of what we'll have to see is to adjust to what the message of the market states within then, but the best guess is that If they do something that's to tail, I'm trying to say to tear, I'm not even going to say it now, something that's really fraudulent, then it's obviously not going to work. Will it be one backed by real currencies? Probably yes. And well, as Mike Maloney stated in his book, and there's really only two things that can happen, and that is one, fiat becomes asset backed, and that's an example of a new currency coming into play within the new currency. What does this mean? This means that gold and silver will have to adjust themselves properly. The major expectation is for not only higher prices, but majorly higher prices. I think the favorite is that of a knockout blow, death of currency. And when that's the case, gold and silver usually always win. Within this video, we're going to talk about some charts. The agenda for charts mainly are going to be mainly the 50 candle, 2 Fibonacci, 18 high-low close averages for gold, silver, and the ratio. What that means, there'll be 50 different ticks within the candles, 2 Fibonacci lines, and then these averages. So we'll get started, not within these candles as of yet, but we'll look at the what's been going on within the last few days, and we'll start off with the 20 and 50 day moving averages on the daily chart. What do we see here? Well, we're still in an uptrend. The trend line has been broken, but at the same point, when you break a trend line, that either means that you will have a reversal. For a reversal, we need to break below 34, and go lower. That has not happened yet. Also, it could mean the rate of ascent is going to slow down or trading within a sideways range, and that could still happen as well as a fake out. If we have a move where this is a fake out, then that's a failed move, which would bring a fast move. If we look at the key moving averages, which is the purple line 20-day moving average, blue line 50, this purple line was massive support. The difference in here is that it wasn't. What does that tell us? It tells us that the market really hasn't corrected, at least until now, because every single time it touched this moving average, and here it was through slow gains. It had a decent gain from 24 up to 29, but then a massive move back. Every single time the decent selling would come back. Here's a situation of consolidating through time. And here, all of these selling moves were not big enough to make a move that would go down towards this moving average. This last one, it was, however, solid enough. Now, as far as the 50-day moving average is concerned, the 50-day moving average was support in here for a few days, fell below it. It failed to be resistance in here. Whenever you have a move where you go through a key average like this and recapture it fast, often brings a fast move. That's exactly what happened. As far as the daily chart is, or sorry, the hourly chart is concerned, we have this 5-day moving average. It was significant resistance, but corrected through time. Comes right back up to the 20. Thus, since the break of the 5, it has traded within this range. If it doesn't hold, then the break above it is a failed move. Of course, if it does, then that should oftentimes bring a nice intermediate reversal trend. Going through some other different charts, the curved trend line, something to look at, showing there's still upside potential room available to get to the top of this trend line. Really nice smiley face. Not gonna get much into that on this particular video. As far as the weekly chart is concerned, the trend lines are automated based on parallel lines. Each difference from each point is the same. It looks as if we're going to be heading towards this line, because when you have a significant resistance point that is either very little resistance or no resistance at all, oftentimes that means you're going to burst to the next one, sort of like in here how you're bursting. And well, we had very little resistance here, most likely a target up towards this level, up towards there. The next chart that we are going to look at will be the the 50 candle ones. We'll look at every single time frame, and we'll start within the hourly chart. This is exponential Fibonacci because the variable differences are so grand. It represents the lows of pretty much $1.25 and the highs of $50 per ounce. And what this shows us is if we're above these lines, then that's bullish. Above it here, below this, we are bearish. Overall, there's many different statuses from very bullish to cautiously bullish, neutral with an upside. You could also have parabolic. This isn't parabolic. Where did we get bullish? Well, within here, we were neutral. So the bullishness would really start in here, newly bullish in here. You have your correction, and what's happening is we're just now getting very bullish as we've had two nice candle breakouts within this pattern. Now in here, we really didn't go down much further. The bear market really did come into play. And some people will state, well, it's because of inflation. It really can't go any lower because of that. Well, one, what does the message of the market state? Message of the market states that currency is getting devalued, that we have higher prices, that most likely it's pretty safe to be buying within this situation. Also, the message of the market states that throughout this type of long-term trend, that we should have some sort of upward bias of some degree for the markets to trade normally, which is another good reason for doing long-term investing in different precious metals. If we switch this up to the quarterly, basically what this means is you're looking at the same chart, but you're going to be looking at the last day. So we'd be looking at only the last so many days within the same time frame type deal. So we'll move now on to the quarterly chart. Within the quarterly chart, we are also very bullish, getting close to some parabolic gains. When was the breakout point from this point or for this chart? Well, we've been really neutral in here, and we hit the nice little candle breakout, and really this is when you wanted to get it on the breakout. Other situations, breakout in here. The big move in 2008 had a major shakeout, but it recaptured it very well. Within the 18 average of highs, had some resistance here, some support, another great buying opportunity in here. Is it up too much? Within the chart, it might be. Of course, when you use fundamentals for how currency is made, it obviously is not. But if you're looking to buy, sometimes you want to shorten this out to shorter time frames and find many other good entry points. We'll switch it up from the quarter to the month, and there is 4 months and a quarter, so the last so many few years. 3 months and a quarter, actually, excuse me. And within the quarterly chart, what does this show us? We're also very bullish, above these key moving averages, above the key Fibonacci. It once again, it had a failed move below here. It tries to go below the 18-day average of lows. Doesn't hold. Doesn't find resistance in here. That's the failed move. We've had the fast move ever since. When did it break out bullish? It did a little bit here, as well as here, and again in here, again in here. Next one is the weekly chart. Within the weekly chart, what do we have in here? We also have very bullish. And it's getting close to being parabolic on here. Not quite yet. When was the breakout point? Well, we were very neutral in here. You had a nice little breakout point there. Has support tested here, more breakout points, and now we're seeing again that the market is consolidating, giving more opportunities to buy when it's not up so much. Next one after this would be going from the weekly chart to the daily chart. We've already seen the daily candle already, not within the Fibonacci or the 18-period moving average. It's very close to the 20. If you use the 20, the 18, it's really up to you, whatever works for yourself. But what do we see here? It's bullish. It's not very bullish. Why is that? Well, it was very bullish in here, but in here you were starting to get cautiously bullish. At least it was cautiously bullish on this candle. But it has been upgraded from cautiously bullish to bullish because it's held the support level. Its close is theoretically above the 18-day average of highs, but only by a penny, but still along the way, it's showing successful support of this area, ready for another leg higher. Moving this on to the hourly time frame, and within the hourly time frame, our status is bullish. It had its correction through time in here. It came back to the 18-day average of highs, and now it's showing a breakout candle. When was the entry point? The entry point was the final hour of the trading day on Sunday. Next one is the 5-minute chart. The final one, the short-term one. And within the 5-period moving average, what's very easily noticeable is this market correction through time, still above these key moving averages. It has went from very bullish in here to just regular bullish because it's correcting through time. Break this resistance level, it will move from a bullish back up to very bullish again. When were some good entry points within this chart? Well, if we look back in here, let's just start at the beginning. We're in a bearish situation here, cautiously bearish. And then as we move in here, we go from neutral. Neutral with an up bias because you're above the lines, the averages are flat. Neutral with a down bias. You still don't have any new positions. And the real big one might be either in here. You might have gotten shaken out in here, possibly. But then again, here the market goes from newly bullish into a very bullish state. But what's interesting about what happened on this Friday is this has been very common for Fridays to end this way, to be very bullish on so many different time frames, but for the last hour to be like, wow, a lot of stuff's going on. Because the market ended at 4 p.m. Eastern time by having some sell-offs, and as the market switched over, it just had a huge rise towards the upside. Now we're going to switch this off to the gold and take a look at gold on different ratios itself. So we'll start off with the monthly chart. And the monthly chart for gold shows us very bullish. The last test within this band was in here. No reason right now to state that the market is up too much. Can it top and have a decent correction? At some point it has to. Will it be now? I would doubt it. The trend is higher. The trend is that of your friend. It's been a nice bullish move through in the entire run of this time frame. Switching off from now the monthly time frame to the should have daily on here, and I don't see it, but we'll move on to the hourly chart within gold. Bullish within here. Find some support. You're going to a caution level here, and then the caution level really is taken out here. A lot of people getting stopped out of the market, breaking below this point in here, and now you're starting to stay. Am I going to start to go bearish? And a break below this is, yeah, and it did break below it, but it didn't continue to go lower. So now we're back to neutral. It's not bullish, but the bias is towards the upside. For this to get neutral, it really has to get above this line, and these key levels have to start to go back in an upward trend. Finally, we're going to go through the gold to silver ratio. The gold to silver ratio, we will start off within the quarterly chart. And this is what we're seeing. Really choppy, really almost impossible to trade. At least by using this methodology of trading it is, because it's very much a losing theology. But when you break this into a bullish territory, not able to find support. Then you go bearish, not able to find resistance. Then you go bullish, really not able to find support. And now you're bearish again. It doesn't want to stay to one degree or another within this. It says newly bearish, and it almost is a waste of time to try to trade it within that type of mannerism. What's the message of the market? Stay. Well, anytime you go a little bit too low, you're going to get a push the other direction. If we compare what's been going on now compared to what happened before, at least starting in here, you have two major candles up and then the market goes lower. This high was a little bit above this high. And here, we've had three major candles lower, breaking below these significant levels, and we are at as much, much lower from here to here than from this one to this one. So what does this tell me? We're still in a market that's very choppy, but the bias towards this choppy would be to the bearish side. If we switch this out now from the quarterly to the monthly ratio for within the ratio, it's in a very big time bear market. This move in here was a failure. The fast move has already come below. Is it getting overextended to the downside? Yes. Can it get overextended more? Yes. At some point, a resistance test within here, as well as this Fibonacci, should come into play. When is another question. My belief is that I think there's a good chance this market will start to go higher when gold and silver really start to taper off. When will that happen? That's tough to state. The bias for silver is that it's going higher. As Brother John has been stating, he says it's going to rip up to 50. Not only do I think it's going to rip up to 50, but even up to the 70, 80. And what I might be doing to play this is actually sell some physical bullion silver for physical bullion gold. What will the ratio be if silver goes to 70? I don't know, but I'd have to think that it's going to be below 30 or even 26 to 1. And then if you make the play and sell silver for gold rather than dollars, if the markets continue to go lower, then maybe the ratio goes from 26 to 40, and then I could at the 40 level I could take the gold, trade it back in for silver, and thus increase the portfolio. But if I make the trade, if I trade silver for gold and the markets keep going higher, the ratio goes from 24 to 16, and I would have lost big on dollars. At least within gold, I would still have something that's going higher in value. I'll talk more about that as I adjust the message of the market within that time frame. Because just because I state when silver gets to 70, I'm going to sell some silver for gold, that's the objective, that's the plan. Doesn't mean that I will continue to adjust to what the message of the market happens to state. Moving forward to the daily time frame, and this is what we have in here. We're in a downward trend, and this is a situation where what it looks like is we've had a nice downward move. It's came back up to this key resistance point, and it's now starting to break lower. Some more entry points to state. Does it look like we're going to have a test of this level? Does it look like we're going to take out this level to the downside? And if that's the case, how much further is it going to be going lower? Continuing on, I should have an hourly one, I think. And here we are. What does the hourly chart state? Well, you stated on the daily that you were looking to find an area to potentially go short, and it's been hugging the 18-hour averages of lows for quite some time now, has not been able to get out of this significant resistance point, really showing that it doesn't want to have the energy needed, whatever is needed to make this go higher. The final hour of the day had a nice little red candle breaking this key support level, coming back to its previous intraday resist or support. I'd be looking for this to continue towards the downside. Doesn't mean it will, because adjust the message of the market if it doesn't. Thank you for watching this, and have yourself a magnificent week. Bye-bye.